Good afternoon, and welcome to the Bob Woodruff Foundation's webinar, Mastering Restricted Funds, Compliance, Clarity, and Confidence. I am Macy Calvert, Program Officer here at the Bob Woodruff Foundation, and I welcome everyone joining the call today and look forward to hearing from our speaker. For those of you who may be less familiar, the Bob Woodruff Foundation's Got Your Six network is the largest non-governmental network of organizations serving our military and veteran community. The network includes over 375 veteran-serving organizations of varying sizes, maturity, and focus areas. I am confident that this content will be helpful for our partners who are boots on the ground, serving the military and veteran community. I'd like to encourage everyone joining the call today to type any questions in the box labeled Q&A at the bottom of the webinar screen. As we have a full schedule for today's webinar, if we don't cover your questions during the session, I will share them with our speaker as a follow-up and include responses when we send out the recording. I'm very excited to introduce our speaker, and we have with us today Stephanie Skryzowski, who is the founder and CEO of 100 Degrees Consulting, which provides financial strategy and bookkeeping services to nonprofits around the globe. She is a chief financial officer who helps nonprofit leaders better understand and use their numbers to make smart decisions to grow their bottom line and their impact. Thank you so much for joining us, Stephanie. And she has a great presentation full of valuable content, so I'm going to hand it off to her to dive in.
I am super excited to be here with you all today to talk about managing and mastering restricted funds. So let's dive right in. Okay, why do restricted funds matter to our organizations? You may have restricted funding already, and restricted funds go directly towards our purpose and our programs. If you manage your restricted funds really well, you are building donor trust to show your funders that you can use their money as you have promised. And then managing your restricted funds really well can often help encourage future funding, increased giving, multi-year pledges, and new opportunities. And that's why it's so important to manage your restricted funds, not just your restricted funds, all of your funds, of course, but we're focusing on restricted today, managing these numbers really, really well. So today we're going to focus on three different areas: understanding restricted funds, making sure you really know, wait, do I have restricted money and what does it look like? We're going to talk about tracking and reporting on restricted funds, and then telling some stories with your numbers. So really understanding and using your financial statements to tell a story about the financial health of your organization. So, like Macy said, my name is Stephanie Skryzowski. I'm a CFO. I have spent the last 10 years supporting nonprofit organizations through my company, and then the 10 years before that, working inside nonprofit organizations. So, nonprofit finance is what I live and breathe and do every single day, and I'm really passionate about this. So, I'm super excited to share it with you today. So before we get into our first section, understanding your restricted funds, there's a couple things I want to share. I want our time together today to be super actionable and tactical for you all. So I have some prompts at the end of each section that I'm going to ask you to be thinking about how you will apply what you just learned to your organization, right? Because I do not want you to walk away after an hour together and not do anything with the knowledge that you've gained here. So I would really encourage you to stop multitasking, close the email window, get a pen and a piece of paper, get ready to take some notes and jot down what you're going to do, what you're going to take action on after our time together today. And I do have some resources for you at the end that will help you take action on what we learned together today. And you will also get these slides. So let's dive in. Understanding restricted funds. What are restricted funds? So this is money that is given to your organization with specific instructions from the funder on how it can be used, when it can be used, or where it can be used. So usually we're seeing restrictions with either a time, like it must be used within, this fiscal year, or a purpose. It must be used for the education program. And there's a bunch of different restricted funds kind of within that. So we have temporarily restricted funds, and those are donor dollars that have to be used, like I just said, within a purpose, for a purpose, or within a specific time period. We have permanently restricted funds that money has to stay intact forever. The only money that we can use from that is the income or the earnings that are generated from that pot of money, but we can't tap into the original pot. Then there's board designated funds where this is money that maybe your board has earmarked for a specific purpose. Maybe you have a project or you have to maintain a certain level of reserves, but they can be redirected at the board's discretion. And then finally, you may have some restricted funds for an endowment or for capital expenses. And these are really long-term funds for the organization and usually have to be approved by the board in if you want to spend those funds. So restricted funds can look a little bit different, but they all come with restrictions and rules around them. On the flip side, let's just clarify what is unrestricted money. So, unrestricted money is money that comes into your organization that you can use towards your mission, of course, but for anything within the mission, right? It's still subject to whatever internal policies you have, internal procedures, obviously, like IRS rules and accounting rules. But within your mission area, you can spend this money however you need to. So those are the big differences that we want to make sure we understand. So, some typical funding sources where restricted money might be coming from. If you're thinking like, ugh, I'm not sure if we have restricted, is this money restricted? Think about these different sources of income that you have because they may have some restrictions around them. So, individuals can restrict their money. So if I were to give a nonprofit, $5,000, I could tell them that I want it to go to a particular program and they have to abide by that, right? So individuals. Corporations, right? If you have money coming from corporate, they can specify how they want their money spent. You may have grants. This is a huge source of restricted money for a lot of nonprofits, and these grants can come from governments, foundations, corporations. There's also often reporting and compliance requirements that come with grants, especially those with restrictions. And then government agencies, right? Local agencies, state agencies, federal agencies, they give grants and contracts, which sounds like the same thing, but it's not. They're two different things to deliver programs or services. And this is often another source of restricted money. So again, be thinking about like, okay, what are all the potential sources of restricted money inside my organization? I want to give you a few examples as well if you're like, I'm not exactly sure. So let's look at individual donors, right? A major donor contributes $50,000 for a new youth program with a stipulation that it has to be spent within the next year, right? That's restricted in two ways. They're saying what program it must be spent on and when it must be spent. So the thing we want to keep in mind here is to document any restrictions, whether even if it's an email, even a post-it note on a check. You go to the mailbox and there's a check from a donor in there, and there's a post-it note that says for the education program that has to be documented, right? That counts as donor intent. The other thing that I want to mention with individual donations is that small restricted gifts can add so much complexity to the back end of managing your organization's finances and fundraising. So think about what your threshold is for tracking things internally versus rolling into like a bigger program fund. One example I see all the time is that with online donations, somebody can, donate $5 to your nonprofit. And the nonprofit has the website set up so the donor can click, I want my money going towards X program. Well, because they clicked that, now you have to track that $5, that $5 is going to that particular program. So you may think about not necessarily putting all of those pieces in place to allow people to restrict really small dollar amounts. Okay, an example with grant funding, right? foundation, they can restrict funds to a specific program, a geographic area. They may have specific outcomes, and they may come with strict reporting, not only deadlines, but also requirements. And so, if you have restricted grant money, read that grant agreement beginning to end. It is not the most thrilling document, but there may be some things in there that you are not allowed to charge against the grant, right? So we need to make sure that you really understand the contents of that grant agreement. The other thing that we're going to talk about is making sure that we have the right systems in place to be tracking our restricted funding. And especially when we have a grant where we've sort of created a budget for that grant and the money is restricted, we want to make sure we're tracking all of that in the accounting system as well. So, corporate partnerships, right? Maybe a company sponsors a community event for you and they have restricted the funds to event related expenses only, right? So, you're going to host a big community event. They give you $10,000 to put on this event. You can't go spend that $10,000 on whatever you'd like, right? It needs to go towards that purpose. So we want to make sure that, again, we are tracking this, that we have the right systems in place to be able to track, and that we understand the funder's requirements, right? They might require brand visibility or recognition, and these are things that we need to keep in mind to adhere with their restrictions around that money. And government contracts. So this has been a bit of sort of upheaval of government, especially federal government funding of nonprofits this year. But if you do have a federal, a state, or a local grant, often they're awarding money for specific programs. Don't think I've ever seen a federal grant to a nonprofit that's unrestricted. And they often have really complex compliance and audit requirements, right? There is a special audit if you spend over a certain threshold of federal money. You have to pay for the special audit, and they dig very deep into your finances. So it's important that you know the requirements, that you're tracking everything appropriately. You also want to make sure we understand the payment structure of this grant. Is it reimbursement where you have to spend the money first, submit all of your expenses, and then you get reimbursed? Or is it an advance where they give you a bunch of money to start, you spend down that advance, and once you've spent it down, report on it, then they'll give you more, right? Understanding that and how that impacts your cash flow. I know one organization who was almost entirely funded on state contracts, and they were all reimbursement. And so they had to take out a line of credit to be able to front the cash first and then wait essentially like 60 days for the state to reimburse them. So big impact on cash flow. And so when you're thinking about restricted funding, this is something that you want to consider as well. Government contracts and grants require very meticulous documentation. And so if you have some of this restricted money as part of your revenue portfolio, you want to make sure that you have strict processes in place for monitoring those funds, for tracking those funds, for documenting everything, and making sure that you're spending according to their rules. Okay, so those are some just like little tips and tricks for different types of restricted funding that you might have. Some of the language, if you're like, I'm not really sure if this is restricted, first of all, you're not alone. Often I will get from, one of my clients, they'll send me a grant agreement from a funder and I read the entire thing. And even I'm not entirely sure how it's restricted or if it's restricted. So I always pass it by the auditor to say, hey, can you just give this a double check? I think it's restricted, but I just want to confirm. So if you have an audit, if you have a CPA, somebody that files your 990, definitely ask them if you need just like a second set of eyes to determine the restriction. That is a-okay. The auditors love when you ask those questions versus putting it into your books incorrectly or not tracking it the right way. And then when audit comes, they have to, undo things and make adjusting entries, and that's no good. So, some of the examples of language that you might see are something like this for time restricted. The funds are to be used between July 1st, 2025 and June 30th, 2026. Some grant agreements will lay out dates exactly like that, so you know that it is time restricted. For purpose restricted, you might see something like this grant is awarded exclusively for the after school tutoring program or insert program of your choice here, right? Sometimes it will say if you applied for a grant and you had like a title to your grant proposal, it might say, this grant is awarded exclusively for, and then insert name of grant proposal there. And so that way you know that it is restricted towards exactly what you asked for. Language around board designated might say something like the board has voted to set aside $100,000 from reserves for future facility improvements. So you might see something like that maybe in board meeting minutes. Or permanently restricted, this principal gift shall be invested in perpetuity with only investment income available to support scholarships, right? So then you know that, okay, we cannot touch the principal amount that is permanently restricted here. Okay, so I want you to take just a moment and think about the types of restricted funding that your organization currently has. So we talked about individuals, we talked about all different types of grants from foundations, any government agencies, federal, state, or local. We talked about maybe corporations, permanently restricted gifts, board designated. Jot down a few types of restricted funding your organization currently has. Because in our next section, I'm going to talk about some compliance areas that I want you to then think about going back to these restricted funding areas that you have and just double checking your compliance. So think about what restricted funding you currently have. Now, let's keep going. The compliance fun stuff, fun slash not so fun. Okay, so there are some accounting rules that as nonprofits we have to follow, right? We cannot just record our revenue and expenses whichever way we feel like, right? There are rules that we have to follow to, be in good standard as a nonprofit. So some of the basics of restricted funding to maintain compliance are, first of all, there are two net asset categories, either with donor restrictions and without donor restrictions. Now, if you have been around the nonprofit space for quite some time, we used to call it temporarily restricted net assets. But now we're just saying with donor restrictions, without donor restrictions. So your balance sheet on your audited financials should have those two categories under net assets, right? So maybe if you're like, oh, I don't know if it does, write that down to double check, okay? So the second compliance basic is that there's some enhanced transparency required of nonprofits. Our audited financial statements must disclose the nature of our restrictions, the amounts of our restrictions, and the timing of restrictions. So basically, if funds are time restricted, you have to spend them within a certain period. We need to disclose that on our audited financial statements and when we can release those funds. So if you have an audit, your auditor is going to help you with this. You don't need to know, oh my gosh, what exactly do I write on there? They're going to gather all of this information for you and it will be on your audited financials. But maybe this is one area for you to double check, like, hey, what does it say on our audited financials about our restricted funds? Okay, so maybe double check there. There are also some clarified release rules. So a release means that when we can basically release the restricted funds from their restrictions, right? And so often there are conditions that have to be met, like we spend the money towards the purpose that the funds were for, right? Or time passes and the time restriction is released. So funds are moved from that with donor restrictions net asset category to without donor restrictions net asset category when these conditions are fully met. So when we've spent the money or the time period has passed. Okay, another compliance is liquidity disclosures. So we have to explain in our financial statements how we manage our liquid resources. And so that is, liquid resources are cash to meet our short-term needs. And this is an area where I have seen nonprofits get themselves into trouble because they are not tracking their restricted funds accurately. They have essentially accidentally spent restricted cash on unrestricted expenses because they've got it all mixed up together and they're not tracking it in the accounting system. They have accidentally spent restricted money on unrestricted expenses. And so we need to be able to track this well so that this doesn't happen. And then finally, another sort of compliance basic is that we have to consistently present our restricted funds on the statement of financial position and detail that in our notes, in the notes to the financials. And again, if you have an auditor, they will be doing this for you. They will be making sure that you are compliant. I just want you to know so you can like open your audited financials with a new lens, right? And look at it a little bit differently and track all these pieces where you're seeing these statements about our restricted funds. Okay, so what is most important to an auditor? Let's put this into like regular plain English. This is what an auditor is going to be looking at. And even if you don't have an audit yet, because you're not required to by, whatever state your organization is registered in, this is still very important. Okay, so I want you to be thinking about like, okay, are we compliant in each of these areas? So what's most important is properly classifying in your accounting system if something is restricted and honoring donor intent, right? So making sure that if a donor says this is going to the education program, that we have tagged it in our accounting system as education program, right? The next thing that is the most important is having clear documentation on the restrictions. And so clear documentation means a grant agreement, a donor letter, maybe board minutes. Like I said, maybe it's even that post-it note on a check that somebody, popped in an envelope and mailed to you. So make sure that we have documentation on how the money is restricted, right? The third thing that's most important to an auditor and for just maintaining good practices in your nonprofit is the accurate release of restrictions and making sure that money is reclassified to without donor restrictions only when the conditions are fully met. And you know these conditions from the grant agreement. We want to avoid commingling of funds. You can put restricted money and unrestricted money in the same bank account if as long as your agreement with the funder doesn't say otherwise, requiring you to have a separate account. But this is why we need to have really good accounting systems and accounting processes to make sure that we are tracking them separately so that any given moment I could look at my financial statements in the accounting system and be able to tell you this amount of our cash is restricted, this amount of our cash is unrestricted. So we have to have very good tracking to be able to do that. And then finally, we need to have consistent reconciliations. We need to be comparing our donor records and our grant agreements to our accounting system to make sure that there are no discrepancies, right? And I've had this before where, maybe a funder initially said, this doesn't happen often, but they initially said their money was restricted to a certain purpose. And then they had a conversation with the executive director and then they unrestricted it. They said, just kidding, we want this to be unrestricted now. So we caught this in our reconciliation between the grant agreements and donor records and the accounting system. And I was able to update the accounting system accordingly to correctly track that, at that point, lack of restriction. Okay, so documentation. What is required? What do we need? So grant agreements, obviously, if there is an agreement with a funder, we want to have that filed away. I strongly encourage an online filing system, whether it's Google Drive or Dropbox or Microsoft OneDrive, whatever it might be. Have an online filing system that is organized by funder, by donor, that has everything in each folder. It is going to make your audit so much easier, and it's going to make your compliance so much better because it's really easy to check and see if we have everything. And then you can share access so that your development team and your finance team both have access, so that we can make sure on both sides we're tracking restrictions accurately. Okay, so the second thing we want to have are donor letters or pledge forms. Again, this is often for individual donors. If they have said, yeah, I want my money going towards a certain program, we need to see that documented. Even if it's an email, that's fine. Just, save the email to PDF and drop that into the folder. Oh, that goes to my next one, email or written correspondence. If there's supporting financial records, obviously showing how we're spending that money, we should be doing this as a best practice anyway, making sure we have invoices and receipts, ideally attached to each transaction in QuickBooks, not just for restricted money, but for everything, but making sure that we've got all that supporting info. And then board minutes. We're probably already saving our board minutes. It is very, very important. But especially if there's documentation of accepting any restricted gifts and any board actions related to releasing or reclassifying money, we want to make sure that we hold on to those. Okay, a few more compliance slides and then we will move on. I know this piece is tricky. So ethical considerations around restricted funding. I think, really importantly, we need to uphold donor trust, right? We need to treat restrictions as a promise that we are going to spend the money how we said we did. And breaking that promise damages our credibility and our relationships. So this is, about upholding donor trust. Number two, we need to avoid creative interpretation of our restricted money. Let's not repurpose funds to fit like what we need today instead of what the donor actually funded, unless we get approval from the donor in writing that says that, yes, I understand this is now your need, and yes, you may redirect this money. And I've seen that happen before, just having an honest conversation with your funder, like, listen, I know you funded this program, but right now our biggest need is over here. Can we direct some or all of your money? And a lot of times they'll say yes, right? Let's not creatively interpret our grant agreements and push money where we need to without having that conversation. Then there's a balance between stewardship and flexibility, right? We need to find a way to align donor intent with our priorities, our organizational programmatic priorities, without compromising our ethics. And again, here, just a conversation with a funder can really go a long way to be able to be flexible with their money and still honor the way that they want it spent. Transparency, for me, is non-negotiable, right? We need to be able to clearly communicate how restricted dollars are being used, both in our reports, our financial statements, and in donor conversations. And to be able to do all of this, you need your financials like well organized, timely, and everything coded the right way in the accounting system. So that is sort of a foundational piece here, that in order to be transparent, we have to have the right foundation in place with our bookkeeping and our financial management. And then finally, we want to just model integrity for the sector, right? An ethical handling of restricted money really sets a standard for the rest of our staff, our board, our peers. So all of these pieces are super important. So I want you to think, let's go back and think like 10 minutes ago when we were talking about what restricted money do we have. Now I want you to think, is your organization fully compliant, right? Think about what we just talked about and maybe jot down one or two areas that you want to double check. Maybe you're like, oh, we're definitely not creatively interpreting, donor or grant agreements. Wonderful. But are you tracking releases accurately? What do your audited financials say? Are they compliant with everything that they need to be? So maybe jot down one or two areas that you just want to double check. And if you can't think of anything, I encourage you, if you have an audit, that's your thing to go look into. Go to your audited financial statements and flip through each page and just notice how your restricted funds are sort of separated, how they're talked about. Okay. All right. Let's keep rolling. Okay, so I wanted to share with you some common mistakes that I see in managing restricted money. So the first is commingling. And like I said before, you can have restricted money and unrestricted money in the same bank account as long as the funder has not requested otherwise. But I've also seen it mixed into the same accounting line. And like I said before, this puts us really at risk for accidentally misusing that money and huge reporting challenges. How are we ever supposed to report on how that money was spent if it's all mixed together in the same line item, right? We could pull it all out, but that would take forever. So we do not want to commingle. So our best practice here is to use a separate bank account. If you have like a really big grant that, you don't have a ton of them, but you have one really big grant, maybe a federal grant that you need to track, maybe it is a good idea to use a separate bank account. At the very least, separate accounting codes, separate line items in your financial statements for restricted funds. Mistake number two that I see is misclassification. We are coding restricted funds incorrectly in the accounting system. And so that is going to skew our financial statements. It's going to mess up our decision making, and it definitely would trigger an audit finding. So if you are accidentally coding restricted funds as unrestricted, you are unintentionally you know, putting forth incorrect financial statements. So you will have an audit finding around that if it is material enough. So we want to make sure we are classifying correctly. So one way to make sure that this is done properly is to review coding of all revenue monthly and compare it to the donor database for accuracy. So not just dollar amounts comparing the accounting system and the donor database, but comparing restrictions as well and making sure that it is exactly the same in both systems. So I have a client that we do this with every single month. We have an Excel spreadsheet that documents the reconciliation between the two systems. So we make sure we always have the correct coding of all revenue. Mistake number three that I see is over reliance on restricted money, right? This can create a big strain on your cash flow if you don't have any unrestricted dollars available for operating expenses, right? Sometimes a restricted grant will have a percentage of the grant that can be used for overhead, that can be used for operating expenses, but number one, not always, and number two is often not enough, right? So we need to make sure that we are not over reliant on restricted money and that we have a diverse revenue portfolio. And the only way to know this is to make sure that you're classifying everything appropriately in the accounting system so you can run a report and understand what percentage is restricted, what percentage is unrestricted, right? And we also have, if we have too much restricted, it's a huge risk if one funder decides not to fund us anymore. And I've seen this time and time again. An organization is super reliant on one particular grant or one particular funder. That funder changes direction, decides not to fund them anymore, and then they're scrambling, right? So we want to make sure we're not over reliant on restricted money. So our best practice here is to prioritize building an unrestricted revenue base by diversifying our revenue streams. Another mistake that I see is spending restricted money either too fast or too slow, right? So if we're spending these restricted dollars too fast, that might mean that we're going to run out of money before the grant period is over and before we can complete the deliverables that we need to complete for the grant. If we're spending restricted money too slow, that might be a sign to funders that their money is not really needed and or that we can't properly manage our expenses, right? And there's a big cash flow impact to both of these if we're spending our money too fast or too slow. So, to combat this, we want to make sure that we have a clear financial forecast for our restricted funds to map out when we're spending this money, like literally month by month, and make sure it's aligned with our programmatic objectives, like what we told them that we would do. We want to make sure we have a plan for how we're going to spend that money in the time period to meet those objectives. Forecasting is super, super important for restricted funds. Mistake number 5 that I see is poor tracking or no tracking at all, meaning we are not tracking our expenses against a particular restricted line item. And so that just, we have no visibility into our restricted spending. If you have no visibility, it's way more likely that you're going to unintentionally misuse the funds, right? We cannot provide clear and timely reports, and you might have a missed opportunity to spend that money. I came into one organization who, right before I had started with them, they had just given back $80,000 to the federal government because they had not properly managed their money. And the time was up and they hadn't spent it because they weren't tracking it well. And so I don't think anybody wants to give $80,000 back to anybody. So we need to make sure that we're tracking well. So you can use your accounting system's fund or class or project features. It's like a tag that you can tag all revenue and expenses to maintain a real-time view of every single restriction. So if you're like, oh, I don't know what that is, ask your bookkeeper, ask your accountant, whoever does your books. Are we using classes to track restrictions, right? So you can ask them that question. And if not, that's sort of a foundational piece to set up so that we can track our money really well. And mistake number 6 that I see when I say dev, that's development or fundraising, and finance misalignment, right? I've seen before where the development team is over here, the finance team is over here, and nobody talks to each other. And so program details or restriction details are not shared. And so finance doesn't have the information that they need to track properly. And the two departments produce numbers that don't match. Oh my gosh, I've seen this so many times and it's a nightmare to unravel. But we want to make sure that development, finance, and programs too are talking to each other. And so I do this with my clients. I hold regular joint reviews of new gifts, of existing grant agreements, and upcoming reporting requirements so that we are all on the same page on reporting against these grants. This is super important to make sure that everyone is on the same page. I have even seen audit findings before because a development person did not tell the finance person that they signed a new grant agreement. Somehow it was brought to light during the audit and it was never recorded in the books. And so that was definitely an audit finding. So we want to make sure that we are meeting with anyone who touches restricted funds in any way so that we're all on the same page. All right, so there are a lot of consequences of mismanagement of funds, and we don't want any of these to happen to any of us, right? There's audit findings which may result in higher audit costs or a potential loss of funding. We could lose donor trust. We might have IRS or state issues. Funding instability if money has to be returned. I've seen it before. So we really want to make sure that we are putting the appropriate time and attention into managing our restricted funds really well. Now, I want you to think about, is your organization making any of these common mistakes? I really hope not. But think about that for a moment and jot down if you even have a question that you might take to your bookkeeper or to your accountant, to your finance team. This is super, super important. So think about, are you making any of these common mistakes? Do you have a meeting between finance and development on a monthly basis? If not, it's probably a great time to set one up. Okay, so jot down anything you notice that you want to double check on after our time together today. So Like I said, we're going to talk about systems for tracking and reporting. This piece is super important because if you don't have the right systems in place, none of these, you're not going to be able to do any of this, right? So we want to make sure that we have systems in place so that we gain clarity on our restricted money, because clear systems help us see exactly how much restricted funding is available and how it's being used, right? I have actually even seen organizations use reports about their restricted funding to help guide their fundraising strategy, right? So if they've got, say, 5 different programs and they can see that they've got restricted funding that's covering 3 of them, and fully covering all of their expenses, they can then target their fundraising efforts to raise money for the 2 programs that are not fully funded, right? So there's even like a strategic piece in this as well. So the second reason that systems matter are accuracy, right? When we have the right processes and systems in place, we can make sure that donor restrictions are being recorded and reported correctly. And of course, it gives us confidence. Leadership, staff, donors, everybody knows that the funds are being managed responsibly, and that is only going to snowball into more funding, right? If you can always consistently produce timely, accurate donor reports on their money, like they're going to want to give you more, right? Okay, so your accounting system. I also just want to reiterate that you will get these slides. And so don't feel like you have to take notes on every single thing. You can go back and look at these again. So your accounting system, we need to make sure whether you use QuickBooks Online or something else, we need to make sure that you can tag or code every single piece of revenue, every single expense as with or without donor restrictions. In QuickBooks Online, I often use either classes for programs. Sometimes we use projects, but we want to make sure we can track the activity and balances for each restricted purpose, every program. That way, it's literally the click of a button to produce donor-specific reports, board-level reports, audit-ready reports. It's nothing, right? It's a few clicks and you've got the reports. And if you needed to, and often with, say, a government grant you do, you will need a detailed transaction report showing every single line item of how those restricted dollars are spent. So your accounting system is key here, getting it set up the right way. Next, your chart of accounts. So your chart of accounts are the individual line items that you see within your financial statements. So you probably have a line for individual donations, foundation grants, government grants, and then on the expense side, salaries, office supplies, etc. That's your chart of accounts. So I want to see separate revenue accounts. Sorry, one sec. Okay, I want to see separate revenue accounts for restricted and unrestricted revenue. And I want to see expense accounts that align with your programs and your grant budgets. Okay, so if you have a grant budget that lays all the different expenses in that grant out a certain way, I want to see those in the chart of accounts as well so that everything matches. We want to make sure your account names are clear and consistent. And we always want to be looking at that chart of accounts on, say, an annual basis to make sure that it matches the way your organization is running. Okay. Classes. So this is a lot here. We talked about your accounting system. We're digging one step deeper into your chart of accounts. Now we're going one step even further with your classes. So we want to turn on classes. If you're using QuickBooks Online, we want to turn on classes so that you can tag every single transaction by program and or funding source. Okay. So I typically have a class for every single program. So again, say I have 5 programs. I have one class for each, and then one for admin and one for fundraising. And then we want to assign a class to every single revenue and expense transaction. Okay, that way we can run a report, an income statement, which shows revenue and expenses for each class. This is a bit of a, it's like next level accounting, but so important. So this might be a question that you also ask your bookkeeper or your accountant, your finance team. Are we using classes? Can you run an income statement by class? And if they're set up correctly, it should be like click, 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 and you can have an income statement by class report. So if you need to, take these slides afterwards to your finance team, share with them, and ask them how things are set up. So if this sounds like a foreign language to you, no worries. Take these slides to your finance team, and you can ask how your accounting system is set up. Okay, the last thing I want to note about having a good system for tracking restricted funds is that you need a very strong monthly close process. So, this is like a finance thing, right? A bookkeeping thing. We close the books every single month. So, we want to make sure, number one, that it is timely. So ideally by the 15th of the following month, or 2 weeks after the end of the month, we want to have our books closed. And the reason for this is that we need real time information to make decisions, to report to our funders. And if we have reports that are, 3 months old, we're probably not managing our restricted funds really well. So we want to make sure also, number two, that we have a web-based software. I love QuickBooks Online. That's what I use for all of our clients. And we want to make sure that we have the right staff in place. I know a lot of startup nonprofits often use their, brothers, friends, cousins, neighbor to do their bookkeeping because it's free. But we really want to make sure that we have a professional bookkeeper that understands nonprofit accounting. This is really important because we cannot let our restricted funds be mismanaged or be left to chance, right? Or be left to somebody that just doesn't have that expertise. So when we're talking about managing restricted funds, it is becoming a bit of a more sophisticated bookkeeping and accounting. So if you're hiring a bookkeeper, we want to make sure that you ask them, do you have experience managing restricted money? Make sure that they have nonprofit experience. This piece is really important. Of course, we want to have checks and balances in place, like I mentioned, comparing the accounting system to the donor database, having the development and finance checks and balances, and making sure our systems are reconciled. So, my question for you now is, which system or process does your organization need to improve or implement next? So, we talked about our accounting system. We talked about our chart of accounts, and we talked about our classes. So, think about that for your organization. What do you need to improve or implement next? All right. So hopefully everyone has something jotted down at this point. And with that, we will keep moving. We've got about 10 minutes left. So I think what we're going to do is I want to share with you a couple reports that your organization that you should be looking at every single month. I prepared a lot of slides for today, and we're not going to get through all of them, but that is okay because you will get the slides and be able to kind of dig in at your own pace after our session today. So, our last section is all about telling a story with your numbers. And this is all about transparency, right? I really believe strongly that everybody needs to see the numbers. When we're more transparent, people have a greater sense of ownership. And when they have a greater sense of ownership, they're going to be more engaged. In fact, there was a study that GuideStar did that showed that transparent organizations received 53% more in contributions the next year, right? So when we're transparent about our numbers, more money comes along with that, right? So we want to have confidence in sharing about our financials so that we can be more transparent. And the key here that I want to talk about is looking at your financial statements and then using some very simple metrics to be able to translate those financial statements into a story about your organization. So, a couple things that I want to share, a couple examples. First of all, one metric is revenue diversity, for example, right? And revenue diversity just measures the percentage of revenue that comes from each source. And so this is really important. We talked about this before, making sure that we understand our split between restricted and unrestricted revenue. And so I've shared with you a handful of metrics in these slides, and I share exactly how to calculate it with some examples so you can kind of follow along. But an example of a story that then goes along with that metric for revenue diversity, for example, says we've historically been reliant upon foundations for nearly half of our annual revenue, but with changing priorities in the sector, we're trying to increase our individual donor base for ongoing sustainability. So, this might be something that you could share with your board. Maybe you're sharing with them the breakdown of unrestricted versus restricted and talking about why your fundraising priorities are what they are, right? So that is one example. Another example is looking at our restricted versus unrestricted net assets. Like I said, if you look at your audited financial statements on the balance sheet or the statement of financial position, that's another name for it, you will see a breakdown of your net assets, and you should see one line item that says unrestricted or without donor restrictions and with donor restrictions. This is an old version that still says temporarily restricted. So this shows you exactly how to calculate what we're just looking at what percentage of your net assets have restrictions. And here's a story that you could tell that goes along with that that says currently, only 36% of our net assets are unrestricted. The other 64% are restricted for program purposes or use within a specified time period. We are currently seeking additional unrestricted funds to cover essential operating expenses. So maybe this is something that you're talking to a funder about, and you're taking your financial statements and your actual financial health and these metrics and turning it into a story, turning it into a conversation, right? And adding data points to any conversation is only going to make that stronger. So this is how we are taking our financial statements, taking the different pieces of data that have to do with our restricted money, and turning that into telling the story of our finances. So I want you to think about, we didn't have a chance to go through all of them. I'm excited for you to see the slides because there's 3 different reports and probably 6 or 8 different metrics to look at and calculate for your organization to really understand your financial health. And I want you to think about which are going to be the most useful in telling your story to whomever that might be, whether it's a funder or your board or even your team. I love to share financials with the staff. So think about what is going to be the most useful. Now, my favorite part, what are we going to do next, right? I told you at the beginning, I'm all about taking action. And so we talked about 3 things today, the 3 keys to successfully managing restricted funds: knowing the rules, right? Knowing all those compliance pieces that we talked about, setting up the right systems to be able to easily follow those rules, and then communicating with clarity. So I have in the slides a quick win checklist. So I got like 6 or 7, I think 7 bullet points here that I want you to maybe just like take a quick screenshot or take a picture of this on your screen. You're also, again, gonna get the slides so you can come back to this. But some quick wins related to managing your restricted funds are reviewing your current restrictions. We got to know, make a list of your restricted funds and their balances. We need to know where we are right now before we keep moving forward. Next, I want you to verify documentation, right? Make sure you've got grant agreements, donor letters, everything is accessible, filed neatly online in a way that anybody could find it and that it matches your accounting system. Number 3, make sure that all revenue is recorded correctly with or without donor restrictions. Number 4, either set up or refine your tracking. I give a lot of suggestions. Those slides that I had in here earlier have a lot of bullet points. So I encourage you to go back and read them and make sure that you've got the right tracking set up in your accounting system. Number 5, align with development, or if you are development, align with finance, right? Make sure that we're holding some sort of meeting to review donor restrictions on a regular basis, reporting timelines, reconciling the two systems. Number 6, create a spending plan. So forecasting our projected expenses for each piece of restricted funding to make sure that we are meeting the funder's requirements. And then number 7, putting together donor ready reports. So if you've done all 6 of those things already, the donor report should be easy peasy, click of a couple buttons. And this is really going to go a long way for building trust and stewardship with your funders. So I hope everybody has at least one thing you're going to take action on today. At the bare minimum, I want you to check out your accounting system and see how it's set up. At the bare minimum, I want you to look at your audited financials, if you have them, and see where restricted funding is throughout. Okay. And hopefully you have at least 1 or 2 other things to do as well. So I want to share this with you all. I think the link will go in the chat as well, but I would love for you to download these slides so that you also have that restricted funds quick win checklist that we went through. Like I said, there's tons of slides, and there's like 70 something slides in here. So I want to make sure you have them all. So grab this, go to the link, use your phone to grab the QR code. And with that, that's all for me on restricted funds. I feel like we could talk for probably 2 more hours about this, but I will stop right now and pass it back over to Macy to wrap us up.
Thank you so much, Stephanie, for this amazing presentation. And I dropped the link in the chat. It will also be in the email we send out to all registrants. We want to thank everybody who's attended the webinar today. And in the coming weeks, we will send out that email with the recording of today's webinar and that link that is also in the chat and on the screen in this handy little QR code. We really appreciate everyone's time, and I hope you all have a wonderful rest of the day.